It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the mayor of Beckerville, USA, Mr. Michael Becker. Michael, how are you?
Hey, Paul, doing pretty good. How are you?
Good. Why do we call it Beckerville, USA?
I don't know. Why do you call that, Paul? You're the one who came up with it.
Because you own so much real estate in Texas that they named a town after you, and because you pay so much in frickin' property taxes, they should be picking you up in a limousine every day.
We do pay a lot in taxes, and it seems like it's going to be a lot more in 2020 than 2019, unfortunately.
That's crazy, huh?
Yeah, keeps going up.
So I think now the state of Texas is, on the other side of the quarantine, so to speak. I mean, I was seeing a lot of the people that live in California, some parts of New York, starting to come out of their shells a little bit. There's areas of I think of Hawaii that if you go over there, you have to self-isolate for 14 days. So that hasn't cleaned up itself yet. I think I read that Kauai is an example, one of the islands over in Hawaii that let's say 65,000 people, they only have 10 ICU beds over there. So if somebody gets sick, good luck. So they keep a real close eye on what's going on in some of these different areas. So how are things going for you and in all your properties in Texas?
Yeah, things are going good. Besides, as you mentioned, my Hawaiian vacation got ruined by the quarantine. So sort of that. We're going to be finding alternative vacations this summer, which might be sitting in the heat in Texas, unfortunately. But maybe we'll figure a way to try to get out of town for a little bit. But operationally it's going well, and had strong April, strong May, and looking for a strong June, hopefully as well from a collection standpoint, and economy's opening up again, and we're kind of, I think, on the path to recovery. Hopefully, I might say we're out of the woods. I certainly do expect we'll have some sort of economic pain here coming, but hopefully we're starting to kind of see the foundation of a recovery, and we'll get back at it and start living our lives again. I just hope school goes back, because I can't homeschool again next year. That was too much.
I think a lot of people realize the benefits of sending your kids away, not only education, but it is almost like childcare to say goodbye to them in the morning and see them come home in the afternoon, and then you can go to work and do your job. But I've gotten a great appreciation of the teachers out there, just because of the tremendous amount of work that they do trying to keep these kids in line and keep them going. So I appreciate all those teachers, and also the frontline workers too. So, I mean, just unbelievable acts of courage to keep this economy going. So, well, we talked to Michael Becker because he is the man with all the ideas. As you know, Michael has gone from being a large real estate commercial loan officer, that with a big bank platform, he was the number one guy in his division for a number of years, did the most amount of loans, became very good of being a loan officer. So he understands credit, he understands risk, he understands how the vendors get paid, he understands how these transactions are put together. He used that knowledge to go out there and buy one deal at a time, a portfolio of properties. Now, him and his group over at SBI, they own 6,000 apartment units. So he's gone from being a loaner of money to an owner of real estate. So we certainly do appreciate Michael helping us answer some of these questions that come in. So we had a question that came in, and I just want to kind of set the table. So about a week and a half ago, Nick Flowellen and I did a podcast with David Moore at Nightvest. And remember, David purchased over 110 large apartment buildings. He's quite a player in the multifamily space. I think he's the 40th largest landlord in the United States. On that same podcast, we had a property tax consultant, Mark Cantrell with Cantrell McCullough, and Patrick Nugent with CIS Insurance Advisors. And they spoke about the largest line items on the operating statement, which are property taxes and insurance. So they discussed what was coming down the road, and yikes. So that generated the question that came in today. So, Mike, I own a few apartment buildings. What are you guys doing today to lower taxes and insurance? Is that even possible? Do you guys use master insurance policies? Do you have any suggestions? And what are you using to underwrite transactions? 300, 400, 5, 6, whatever cost per unit. What are you guys using? So that's the question. So, Mike, property taxes and insurance.
Yeah, we'll take them probably one at a time. Maybe we'll start with insurance, and that's been, brutal for 2 years in a row, really. Last year we got, I think, 20% plus minus increase in insurance in 2019. And that was pretty rough. And then this year, I think we were, I don't remember exactly where it shook out, 12 to 15%. And that was a deal, right? Relative to everything else. So, we shop real hard. I mean, super, super hard. So it's not only just the premiums going up, but the coverage is getting worse. So in Texas, I mean, it's pretty much turned from tickler for wind and hail. So you have a couple different types of insurance. You got, generally speaking, your P&C, property and casualty. Then you have your liability. Then you have some excess liability typically. So your liability is for, kind of slip and falls, deaths, things like that on the property that injure people typically. And then the property casualties for fires, floods, wind, hail, things like that. Well, not necessarily like floods from like a creek rising and flooding your property, but if you have like a water break and a floods unit inside it, you file a claim that way. So you typically will have in Texas wind and hail deductibles, and then you have all of the perils. So a fire would have one type of deductible, and a hail claim or a tornado would have a different type of deductible. So what we're seeing over the last several years, last 10 years, really, quite a few claims in Texas, in particular North Texas, and where it's flat goes on forever. We have a lot of hail storms that typically run through the area. And then in 2019 October, we had a pretty large tornado rip right through the wealthy part of North Dallas, destroying many structures and homes and things like that. So we've had several years of losses that insurance companies have paid out in excess of the premiums they collected, and they've decided the last 2 years that that's not going to happen anymore, I think. So we've seen not only double digit plus type increases in premiums. We've also seen deductibles go from wind and hail deductibles of $25,000 or $50,000 deductible to 2% is pretty standard in the marketplace right now. That's the best you can do, is get a 2% deductible. And if you start really looking at and that's based off the insurable value. So say you have a 300 unit apartment complex like we have, you have insurable value of $25 million or something like that. A 2% deductible would be $500,000. So you could likely put a roof on a property for $500,000. So they're basically making you self-insure your own roofs, essentially, is what the end result of that is, Paul. So it's pretty rough. It'd have to be like a epic hailstorm for your roof to go over basically the 2% of insurable value in most cases. So you'd have to have like what happened to our buddy JC, what was that, 5 or 7 years ago, whenever that was. We had a large like softball size hailstorm kind of hit Collin County, which is, he had a property in Wiley that he basically shredded, and the hail was piercing the decking and the sheetrock and the units and like going on.
Yeah, I was surprised nobody was killed on that type of stuff, because those big hailstorms as big as bowling balls came right through the roof, right through the decking, right
piercing siding, right?
Yeah, pierced the siding, and then went right in. Some of them went right through the ceiling and wound up in the couch. Yeah, I mean, great. And these things were just a little bit smaller than bowling balls, a little bit larger than softballs. I mean, it was unbelievable. It Swiss cheese the entire roof up.
So it'd have to be a storm like that to really start getting over that 2%. So if it's just your normal kind of golf ball size hail, which is far more common, that's not going to damage a bunch of decking and things like that. So you're just better off you're effectively self-insuring your roof. So not only is your premium gone up, your coverage sucks at the same time. So that's the state of the market, and that's just kind of basically all of Texas, to the best of my knowledge, and it's worse in North Texas and Houston. And Houston has the hurricane risk and other stuff like that. So it wasn't nearly as bad in Austin. Austin really, we own property in Dallas and Austin. Austin really was largely untouched, and Dallas was, just crushed. I mean, that's basically kind of how the world is. So, that's just something you need to know. I mean, you could shop it super hard, but even shopping it hard will make a difference. Don't get me wrong. That's certainly what we did. But, you fully expect, if you haven't had your renewal for 2020, it's gonna suck, and there's not a ton you could do about it. Just shop it and do your best to try to get it as low as possible. So that's just kind of the state of the market. And then kind of the 1-2 punch was, we had that. We had COVID, kind of shut down a large part of the economy and caused our delinquencies to go up. and kind of flatten our rental rate bumps that we were hoping to get in 2020. Then the state of Texas and all the central appraisal districts or all the counties came out, and the way the taxes reassess are based off of January 1 values, which were the pre-COVID world, and they came out just swinging pretty much across the board, seeing very, very large increases in valuations across the board. So much to the fact I read an article the other day where the county judge for Dallas County said that it was ridiculous, and he suggested everyone protests and sues the county appraisal district, as he thought it was ridiculous, the valuations that they're putting out across the board. So I expect a very long, protracted process this year, much like last year, where everyone just needs to protest and go, bring knives out and go fight the county appraisal districts to the very last thing and try to get these valuations down. I would be hopeful that in 2021 that they recognize the reality and not go so crazy. But, the property tax system is a way for a lot of the funding in the state, since we don't have a state income tax. So, the way the roads and schools and hospital districts and all those get funding are through property taxes. So that's just kind of the way our system's set up here in Texas. So they came out swinging, Paul, for sure. So hopefully, we'll keep fighting. One thing I did notice, we are been dodging bullets, generally speaking, to be specific to people that own, say, properties in Dallas County. Dallas County's been, really, really liberal with the way they've kind of been underwriting and what cap rates they've been using for the last several years, in particular for workforce housing. So we have, only a couple of C-class deals left in the entire portfolio. One of them's in Dallas County in a city called Richardson. In 2019, for example, the cap rate they used at Dallas County was a 9 cap. And this year they went to, I think it was a 6.5 or 6.25 cap, which, just completely made our property taxes, our value went up 90% on that one asset alone. Now, we've been kind of so lucky on that one deal for many years. It finally got hit. And, if I were to sell this thing in January, I probably could have sold it with a sub 5 cap in the marketplace. But, it was pretty shocking to see a 90% increase in valuation year over year on a deal that we've owned for 4 or 5 years. So it's tough out there. So I think, how do we underwrite, Paul? I'm not quite sure exactly what to give you as kind of like a metric or rule of thumb. I mean, I think really you probably need to, pick up the phone and call your insurance broker and say, hey, here's the specific sets of this deal I'm working on. It's a 100-unit deal, this location, this vintage, what kind of price per door would you underwrite for insurance? And probably, taxes. I mean, taxes, we have the notices out. So, hopefully those will go down. But, taxes, you'll just have to underwrite the higher taxes, and that data is a little bit more readily available. But I would certainly consult with my tax consultant before I kind of finalize my underwriting and go kind of put my final budget to go raise capital together. I would certainly talk with my tax consultant, and I'm certainly be on the phone with my insurance guy, getting some guidance on the insurance number to use, because they both have materially moved quite a bit. So that'll, impact pricing and underwritings going forward for sure.
Do you guys do a master insurance policy?
We have in the past, and actually now of all places, we found a carrier that's actually been much better, and we just have all these policies on one off. But historically, we've been on our master policy, and we looked at that both ways. But this year, we're better off having them all on their own, Paul.
And what is a master policy for people who don't know what that means?
Well, instead of having, if you own 20 properties, instead of having 20 individual properties, you have one master policy that has all the properties on it. And generally speaking, historically, you've been able to get better pricing by having, $1 million in premium versus having $50,000 in annual premium. They'll give you kind of that volume type discount. And in this particular case, we found a carrier that was better off just going, one-off policies for us in Texas, and every part of the country is a little bit different. So, and I know in Arizona, for example, they don't increase taxes, but I think every 3 years. Say like Phoenix, it never rains, and they don't have big hail and windstorms, and so they don't have quite the insurance issues we have here in Texas, and there's no hurricanes or anything like that that's going to hit the state of Arizona. So they have much lower insurance, much lower taxes there versus say like Texas, where we have wind and hail, and if you're on the coast, potentially hurricanes to deal with as well.
And how about during this coronavirus deal that I don't know if you guys had any properties that were all bills paid, but some of these properties, I'm thinking that you probably had to pay water at least, and all these people staying at home, making their home their office, and their office their home. Have you seen these utility bills rise significantly because, they would typically be flushing the toilet 3 times, twice at the office or so. Now it's happening at the house. So what have you
Yeah,
seen for
that's a good
utility?
question, right? I haven't really gone in and analyzed the data, but I need to go back and look at April and May and see kind of what our water bills really are. It's kind of a lagging 30-day type of deal, so we should start seeing those kind of run through. So yeah, I think that's certainly an issue, and we don't have any all bills paid, but like you said, a lot of these apartment complexes, if not the vast majority of them, are master metered for water. So you get a bill at the property level and you allocate it and bill it back or rub it back, as we would call it in the industry. So I would think that those go up. And then in Texas, you can't evict for non-payment of other things, only for rent. And so whenever the courts come up, you're not only going to be stuck with any rent that might be outstanding, but you certainly would probably have larger utility bills to deal with as well. So that is yet another headwind right now, Paul. Thanks for pointing that one out.
Sorry about that. If people want to get more information about what you guys do at SPI Advisory, how do they get a hold of you and what do you guys do?
Yeah, the best way is just go to a company's website, which is www.spiadvisory.com. That's SPI like spy, advisor.com. There's a contact us form, fill that out, and we're always happy to send out some information about what we do. And if you want to get in our database, potentially invest in future opportunities, which hopefully will be coming down around the corner here in a few months. I'm starting to get a little bit more optimistic, Paul. I know we were just being a little bit negative here, talking about some of the headwinds, which are just kind of the reality of the business, and we don't want to hide or sugarcoat anything too much here. But I am getting a little bit more optimistic with the state opening up and the amount of money they're printing, and maybe I'll talk about kind of long-term predictions on a future Ask Mike Mondays here. But I think we will see quite a bit of inflation, and be very supportive for what we do, which is provide housing to people. So I think if you're interested in kind of investing with us, just go to the website and we'll send out some information, get you on the database, and start putting future opportunities in front of you as they start arising.
That's great. That sounds good. So we appreciate Michael answering the questions that we ask. So we appreciate that. Again, that was Michael Becker. I'm Paul Peebles. Have a great day.